Aotearoa, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news no one knows what is going on in the Iran-US negotiations, least of all Trump. Ships are transiting, but at a trickle pace, but they tend to be large Chinese tankers. The bottom line is essentially no progress. And although the benchmark 10-year bond yields are basically holding, yields for shorter terms are catching up, so a rate flattening is underway. US jobless claims dipped last week and by marginally more than seasonal factors would have expected. And precautionary stockpiling by manufacturers is currently driving the US factory sector. New order growth slowed slightly, but is still higher than normal in May, according to the latest S&P Global PMI for the US. But factory activity has taken a step up, so output is rising at its fastest pace in 4 years. Driving all this is the need to get ahead of surging input costs, which are spiking in dramatic fashion. But the activity surge isn't everywhere. The Philly Fed's factory survey unexpectedly contracted in May, and the Kansas City Fed survey was little change from a modest expansion. Both saw very little respite from elevated input costs. US housing starts dipped in April from the good March levels. They're being held up on the same drive to get ahead of expected large cost increases. Across the Pacific and Korea, they are feeling producer price inflation at disarmingly high levels. They rose 2.5% in April to be 6.9% higher than year-ago levels. But factory input costs rose an average of 11.3%, mainly for fuel and other oil-related imports. After a strong rise in February, Japanese machinery orders were expected to ease back in March, and they did, and by about the expected level. However, export orders remain very strong. They are expecting the April to June quarter to be just level pegging with the same period a year ago. But this whole machinery manufacturing sector is in an upswing phase that started in 2023 and one that gathered some real impetus from mid-2025. That Japanese factory order data is confirmed in April export data out yesterday. Japan's exports jumped almost 15% to a near record high of 10.5 trillion yen in April, accelerating from an 11.5% gain in March, the fastest pace in 3 months and topping market forecasts. Exports grew to China, the US, ASEAN countries, the EU and India. The May Japanese factory PMI is still expanding quite quickly, but cost pressures are surging there too. In India, their PMI is little changed at a healthy expansion, but they report further expansion is being capped by rising cost pressure. EU consumer sentiment has stayed very low in May, even if it did bounce back from the ugly April level. The EU economy is forecast to slow down amid rising inflation following the energy shock. And the Eurozone factory PMI is still expanding, but less so, and under heavy input cost pressure too. The Australian labour market is weakening with a turn lower in April. The number of employed people fell by 19,000 people in April, while the number of unemployed people rose by 33,000. Markets had expected employment to rise by 10,000. Their jobless rate is now 4.5%, the highest in 7 months. The April PMIs are out for Australia too, and they show weakening business conditions. The S&P Global Factory PMI slowed to a stall, with the private sector getting its steepest fall in new business in over 4.5 years. The service sector is now in contraction after March's stall. Global container freight rates rose 6% last week to be 10% above year-ago levels, driven largely by outbound rates from China to the EU. Bulk freight rates fell 5.7% in the past week, easing after the prior 6-week run-up and a reaction to Trump's Gulf War. But that still leaves them 125% higher than year-ago levels. The US Treasury 10-year yield is now just on 4.58%, up 1 basis point from yesterday, and the price of gold will start today up $20 at $4,553 an ounce. Silver's up $1 at just under $77 an ounce. And oil prices have dipped 50 cents to just over $97 a barrel in the US, while the international Brent price is just on $103.50 a barrel. And the Kiwi dollar is up 10 basis points from yesterday at 58.8 US cents. Against the Aussie, we're unchanged at 82.1 Australian cents. Against the euro, we're up 10 basis points at 50.6 euro cents. That all means our trade-weighted index starts today at just under 62.3, which is up 10 basis points from yesterday. And the Bitcoin price starts today at $77,759 and up 0.3% from yesterday. Volatility of the past 24 hours has been low, though, at just under plus or minus 1%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.